Hi everyone, Basil Chapman sitting in for the one and only Tom O'Brien. This is the Tom O'Brien Show, and it is my pleasure to be here. Usually I'm doing my 11 o'clock till noon Eastern Time show, Monday through Friday on market days, and it's called the Tiger Technicians Hour. And my service, my daily service is the opening call. Very comprehensive look at the markets every day with positions that we're taking, and every day update where to put the stops, buy stops, or whatever it is that we're looking at. Now, what's really important about this market is that from Friday, there was this slightly very quiet stealth move to the upside. And essentially what we looked at was a sneak to a new all-time high above the 18,288s in the Dow. And today, where did we close? We closed at 18,312 with a certain type of candle, doji candle. And if I'm looking at this is the chart on the left. If you're looking at my charts, for those of you who are always looking at my charts, you'll know that the left side is the daily, the middle is the weekly, and the right side is the monthly, the very long-term monthly chart. Right here, I usually pull up the 120 if there's a question. My 120-minute chart says be a little careful here because there could be some kind of a pullback to make a peak tomorrow if there's no new high in the Dow above 18,351.36. You go one penny above that in the Chapman wave methodology, and you've extended this leg. And the leg is, at this particular point, I use certain technical tools. So I'm looking at the MACD, the moving average convergence divergence, just a very big name for two moving averages, and that's very positive. I'm looking at the stochastic at 94%. Anywhere in the mid-90s is just really strong. So I'm inclined more to think of this as new leg B, and that we should see higher highs over the next 3 to 5 sessions going to what I call the leg D. Let me just quickly do this here just to give you a sense of what I do. Let me move this chart over. There it is. And basically what we look at is we look at the most identifiable lowest low of any particular price movement and then start a wave count. And the wave count is very simple. I use uppercase letters on the way up, lowercase on the way down, and essentially what we're looking for are 4 higher peaks. Once we get there, other things can happen, but the objective is to try to get you to the 4th highest peak, and then we do an assessment as to see, well, what exactly is going to happen next. Now, what is really important at this particular point is that the weekly chart broke out to a new high, and in this cup formation, there are a couple of things we've got to look at. For this cup formation to continue much higher, you need to see a close in the 18,300s in the Dow. I've said to my subscribers that we need to see a close in the 18,300s 3 out of 5 sessions for us to get the sense that the momentum is building in the technicals to be able to push us higher. If we start to fail, keep coming down into the 18,200s, that's going to suggest that we're going to make a peak E in the weekly chart within a week or two, and then you've got to be very careful because there could be another move to the downside. Let's look at the S&P, the SPX.X, that's how I get it. The S&P right at this moment is at 2,127.83, down $1.37. So there's a little bit of a mixed market right here. And in fact, I like that I'm seeing strength coming to the Dow, even though it's just 30 stocks. Why? Because they have the cyclicals, they have the heavy-duty stocks as well, they have the financials. It's a nice mix, and it's telling me that as long as there's some kind of leadership, and this is what's really missing in most, Home Depot was leading the pack. Now it's not acting all that well. And I had that sense about maybe 2 months ago that we were coming in for a slowdown in the economy. I called it a mini recession, although, it's really hard. Economists only talk about a recession way after the fact. It's very hard to perceive, but just based on all the technicals that I'm looking at. So let's just go on with this. The S&P right now, once again, I'm going to not call this a leg F. I'm calling it a B, where B says you should go to a C and a D. I'll be wrong if in the next 2 sessions, the S&P breaks under 2115, closes decisively under 2115, and the Dow closes under, I'd say, 18,120. Now, what's really important about this particular move is that the very long term, I don't know if you've seen a chart like this before. Look, this is the S&P. This goes on for a long time. Look at that beautiful up channel. And I'm going to take this away just for the moment to make it clear. Look how this up channel steadily went towards that upper, I call it the inside track reversal zone, and then you see the price pull back, and what does it do? It goes to the buy zone, the inside track propellant zone. And look how it's walked the 9-period moving average, this black line here, moving average. That's a 9-period exponential moving average. Look how it's sitting nicely above it. It is in leg E. That's what I'm calling it for now. And if I had to extend this a little bit further, you see that that takes it a lot higher. That takes the S&P up to the 2187 if it's to get to the lower part of this Chapman wave inside track repellent zone. So the fact that it's been stalling here is saying to me there's a very big cap in the 2100 area. 21, I'd even say 2100 to 21, let's call it 30s, 2001, 2120 to 2130 area. So I'm going to be watching this very closely. And so far, what we're looking at is there's a change in the mood of the market. I call it the tide. When there's a bear phase, the market takes, just as it did early on last week and before that, and then it suddenly changed its character. What happens is, in a bear phase, even if it's a daily, not a weekly, but even just a bear phase in the daily, you will start to see the VIX, the volatility index. I talk about this a lot in my show and for my subscribers. Talk about this, and I'm talking about it in the sense that I call it buying pressure and selling pressure. Oh, it's made up of a whole bunch of things. It's the 24 and 36-day moving averages. It's out of the money puts and calls in the S&Ps. It's kind of a complicated thing that's worked out, but I like to make it simple. Buying pressure is when it's down in the 13, 12, 11 area. When it starts to get to the 14s and 15s, you start to see selling pressure. Keep it as simple as possible. And you can see that even the 9-period moving average in the weekly chart, and especially so in the monthly chart, has not been there. It's just been unable to close above that black line for a very long time. So let's move on and we'll look at the QQQ series. QQQ series, 109.86 down 20 cents, doing okay, not great, but this is what's really important. I believe that there's a chance that the VIX will go to a leg D, just above 111.16 in the next few days. It might fail just below it, but it's attempting to do that. And if you look at the weekly MACD, it's flat, which says there's a limit. There's an upside potential, but it's fairly limited. And if you look at the stochastic at 82%, it says, yeah, that's good. And it's also above the 9-period moving average. The moment you see a weekly close in the QQQ series, that's the Power Shares QQQ Trust series, which is based on the NDX 100. That's the NASDAQ index of the top 100 stocks. As soon as you see a close below 108, let's be a little safe here. Let's call it 108. I say be a little bit careful because that's going to be a lowercase h failure pattern that's unfolding. And at this particular point, you've got more like a V-shaped pattern or a cup formation. Remember, the market is made up of only 3 chart formations, if you want to keep it simple. A straight line move up and down, that's 1. An arch or an inverted V, that's 2. Or as you can see here, a cup formation or a V-shaped formation, and that's 3. And that's, if you keep it as simple as possible, it'll really help you. So the QQQ series, then we're going to go to, I'd like to go to gold. The gold right now is trading at minus 20, it's at 1207. This is the continuous contract. Now, you remember I was talking about those peak Ds, the 4th highest peak? Look what happened. Peak D, and you see this on, this is the daily chart. You see this coral colored moving average right there? That's called the 200-period exponential. Look what happens. It's a wonderful index, a wonderful tool if you can use it. Look how it was resistance once, then it became support, and now it's resistance. It hasn't even been close to that level since the 6th of February, and it finally started to touch that, went too deep, pulled back sharply. Stochastic still at 91%, and the MACD is still quite good. So we're going to see, I'll talk a little bit more about it when we get back. And I just wanted to say that bonds, the TLT was down $1 at 118. Basil Chapman sitting in for Tom O'Brien. We'll be right back.